If you find you lack discipline and keep taking poor trades out of boredom or frustration, have you ever tried acting like a fucking professional? When I'm taking a position, I ask myself how surprised will I be if this stops me out. If the answer is anything less than very fucking surprised, I don't take the trade.
I read those two quotes before every trading session for months because they form the foundation for everything about your trading strategy and all psychological challenges. It makes you follow your rules, stay disciplined and focused, and execute your edge. However, remember that psychology mostly only matters once you have an approach that gives non-random results, and it's only what can stop the edge from being properly executed. Similarly, in order for most advice to even apply, you need to have that edge, or at least a very clearly defined approach. Just staring at a chart or doing random trades will accomplish very little, but you can learn more about edging and more for free at imintrading.org. Now that we got that necessary prerequisite out of the way, here are my personal favorite pieces of advice. Our brains did not evolve for us to be happy. They evolved to avoid danger and pain, aka bear. We're designed to avoid the bad, and it's partially why bad things hurt more than good things feel good. Tom Haugaard's pain chart is excellent for this. Many of the irrational things we do in trading might just stem from the desire to avoid pain, like deviating from our strategy by not taking losses or profits when we're supposed to, changing the position sizing, and much more. Which, of course, brings us back to acting like a professional, staying focused, and understanding the true weight of what's required to make trading work. That includes finding the solutions to your particular struggles, creating reminders for them, and doing the work that's required to ensure you don't repeat the same mistakes over and over again. Nobody's here to hold your hand, and there's no chance of succeeding if you can't get into some type of mindset that keeps you from being stupid. This quote should encapsulate every other reminder, all problems that you're dealing with, and everything else. It's sort of just the British version of saying lock in. And when it comes to the actual trading part, there's nothing better than this because of how strongly it orients you with your trades. Conviction, high probability setups, whatever you want to call it, I love this quote. However, do you notice any problems with it? Well, it doesn't apply to approaches with frequent small losses that are offset by larger wins. If you've got a 20% win rate, then you're expecting most trades to fail because that's what you've designed. If you weren't thinking about that already, then there's your first lesson in making sure you're skeptical and analytical about everything you see and hear, no matter who it comes from. Lots of advice is based on an underlying assumption, and so it only applies with that assumption in mind, and only if that criteria is met. If you're part of who this quote applies to based on how you trade, then it's excellent for us. Anyways, since we evolved to be bad at trading, we should limit the opportunity for our humanness to cause problems. One real actionable way to help with this is by automating everything you can, specifically when it comes to trade executions. There is no advantage to using a mental or manual profit target and stop loss versus just having the computer do it automatically for you. Many trading platforms now have chart trading with custom brackets, so the stop loss and profit targets are automatic, as seen here from one of my older live streams using NinjaTrader. This happened to be the final day of passing a trade day evaluation. More info on my approach and prop firms on my website. Remember, the point of this is to eliminate the human aspect of trading as much as you can, which reduces the chance of big mistakes. Don't give yourself the opportunity to do something stupid. That's why max daily losses that automatically lock you out of your account until the next trading day are so great. Now, Jim Simons consistently achieved the greatest public returns the world of finance has ever seen. I think. I don't know. So how exactly did he do this? What? He didn't reveal his exact strategy and kept the models to himself so his fund could make billions from it? Why would he choose to make billions of dollars when instead he could have made a couple $100,000 by selling a mentorship or course? Because if you find some type of inefficiency, edge, imbalance, pattern, whatever, keep it to yourself. If you can't make money trading, then sell a course or mentorship. Take a look at these 3-minute candles. There are 8 total, which means this is 24 minutes of price action represented on a 3-minute chart. This is what that same action looks like on an 8-minute chart. Instead of 8 3-minute candles, we have 3 8-minute candles. Riveting stuff here. Stop falling asleep. And after switching to a 24-minute chart, all of that action gets reduced to just 1 candle. And what about this? What's going on here? What is going on? Well, the only difference between the 3 representations of the exact same data is how much information we see. There is no inferior or superior time frame. There's just picking the size of your filter. Do you want to see what happened inside of the candles or not? That's it. which I've said many times and will continue to do, because when people say things like that time frame is too small, what they're really saying is you're seeing too much information. And wow, suddenly that sounds like a pretty stupid thing to say, doesn't it? Bang. Lesson number 2, maybe, about using your brain when you hear someone making a definitive statement about what you should or shouldn't do. A lot of opinions going on in the advice world of day trading. A lot of opinions are stupid, but also I'm just being a jerk. Most of us got into trading by learning from fake gurus on YouTube, which means it's not really a beginner's fault for propagating the dumb information taught to them by people who aren't even experienced enough to understand the problems in the advice that they share. They didn't know that. So question everything you hear and break down whether it makes sense or not. Very quickly, it's worth mentioning that the indicator called average true range, or ATR, with the period set to 1 instead of its default of 14, can be extremely helpful as a way to quantify volatility and any changes to it by showing you the exact total range of each candle. Doesn't take too long to become familiar with the typical sizes of candles based on what time it is, which can prevent you from making mistakes due to changes in that volatility. Since we are completely unable to guess the time frame of a chart, which is proven by this video if you want to take the test yourself, ATR is great for immediately telling you whether a trade based on price action will require any changes in size to the profit target or stop loss. However, as seen by this yellow moving average, all indicators just reinforce what's already there. Nothing actually changed, the indicators have no edge on their own, and yet, reminders and reinforcers are helpful. So use whatever you want as long as you understand the limitations. And don't get scammed by paying for an algorithm or indicator, because remember from Jim Simons that you keep it to yourself if it works by itself. We'll talk time. Most traders who succeed aren't earning enough to replace a full-time job, but some are, of course, making a lot of money. I've seen it myself. However, it's fine to have realistic expectations, and honestly, a big chunk of profitable traders aren't even outperforming the overall market, but they're making consistent money through a process they enjoy. Well, maybe they hate it, but honestly, I don't know how you could reach profitability without enjoying the process because of how brutal trading is. Either way, most people are better off swapping out the Lambo aspirations just for the idea of making a little bit of side money from a process that you actually enjoy. Emphasis on enjoy. Ironically or not, and perhaps just coincidentally, I only started getting payouts from funded accounts and making a very small amount of money after switching my thinking to that. Full breakdowns of firms and reviews on my website, but don't use them if you don't want to. George Washington said that comparison is the thief of joy, so only compare yourself to people you're better than, like British people. No, he didn't. But the first part of that quote is good because there will always be people sharing massive payouts and returns on social media. A lot of them are fake, some of them are real, but still, you don't know what truly went into accomplishing that. And Twitter/X is by far the worst platform for newer traders. And either way, trading is a solo journey. It is you versus you. Focus on yourself, king or queen. Mark Douglas said that you'll never know the reason why price action did anything because it's moved by thousands of different participants, all with varying degrees of influence. So sure, use your approach as a framework to describe, assess, and analyze price action, but don't say with authority the exact reason why price actually did something. Unless the people responsible for moving it tell us, we'll never know the real reasons for anything happening. And no, there's no master algorithm that controls everything. I'd make a comparison to believing that the earth is flat, but I wouldn't want to upset that community again. Actually, yes I do. The few comments per month about how I'm stupid for believing that the earth isn't flat are entertaining. Keep them coming. Mark Douglas time, but I'll be reading his quotes instead of showing the clips of him saying them so that his wife can't copyright strike the video, since apparently I'm not worthy of adding commentary to what Mark said. And again, remember that most psychological trading advice only applies once you have an edge, which I've been saying since 2022. Mark was very clear about not putting too much emphasis on individual trades because everything is just a distribution of probabilities and should be treated accordingly. If you expect something to happen 60 times out of 100, you don't know exactly when those 60 will happen, and it's stupid to get upset when it doesn't work since losses are expected. Move away from individual results, take a step back, and look at the overall performance. There are actually a couple of my videos about him still up on the channel, but let's keep that between us so you know who doesn't take them down. I'm not 100% sure here, but I think it was Tom Halgard who said it can help to switch your expectation from a trade winning to it failing. Of course, individual trades shouldn't be focused on too much, but that little trick is great for reducing the emotional toll of the results. Wouldn't you rather be pleasantly surprised by wins and emotionless at losses rather than emotionless at wins and disappointed by losses? Anyways, Mark also emphasized having a process versus results mindset, not confusing hope with intuition, and that executing your edge without fear or hesitation is a learned skill that takes considerable effort to achieve. And in response to those popular phrases like the trend is your friend and cut your losses quick and let your winners run, he said, who in the hell knew what that meant and how to do it? Which I love because those phrases are in the category of bad advice that's vague enough so that people can blame you for misinterpreting it if you fail, yet they'll credit the advice if you do well because of it. It's just wishy-washy nonsense that means nothing, especially cutting your losses quickly and letting your winners run, because it only applies to very specific trading systems. As discussed in the Words of Wisdom video, the size of losses versus winners only means something once the win rate is factored in. It's no more valid than letting your losses run and cutting your winners quick, because the results of that are only dependent on the win rate. Enough of that though! Most importantly, since it builds the foundation for everything that you'll end up learning and doing, be skeptical, analytical, and separate the person from the message or idea. Some fraudsters can give great advice, and some good traders can give terrible advice. Just use your brain and think about it objectively. Do not get attached to gurus, and don't do all or nothing thinking. This video was just a simple collection of some of my personal favorites, but I'mInTrading.org has actual guides and other topics you need to understand for that advice to help. As for me, my nice long break from trading finished a few weeks ago, and I'm currently up a few thousand on 2 funded accounts, so there will be some withdrawals soon. Yay! More exposing videos coming soon, and thank you to the patrons who support my work and get to see everything early. Nothing there on how to trade.